Hey, good morning, everybody. It's Monday, July 20th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products such as Originator Success, Grab and Go Social, and Rate Sensei. Products to help my originator friends get more business from Google, AI search, and social media. Be sure to check those out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time on Facebook and YouTube, where we talk about what's going on in the markets with rates and pricing. If you're here this morning, say good morning. If you're watching the replay, do me a favor and give me a hashtag replay in the comments. Let me know that you were here. Today's lock advice. We are still locking anything closing in the next 45 days. Stick around and find out why. Tell you all about what's going on and why this is my thinking. But that is where we are at today. If you would like a reminder that I am going live, if you want to get a text alert so you don't miss a moment of the show, make sure you sign up at hmmr.io/reminder or use this cool QR code. So you can either go to hmmr.io/reminder or use this cool QR code, and that will go ahead and get you dialed in so that you too, yes, camera, I'm here, you too can go ahead and make sure you get a reminder. Also, don't forget to sign up for our Rate Lock Advice email. It goes out each and every weekday morning, www.ratelockadvice.com, or use the cool QR code and also our text alerts at www.ratetextalerts.com. So be sure to check those out. If you're here this morning, say good morning. Welcome to all the live folks. Good morning, Sean Segaloff, Rob Stewart, Megan Bissell, Angela Walters, Holly Johnson, Brandy Brickler, Tim Kleila. Ron Siegel says today is National Get Out of the Doghouse Day, aka Men's Day. Men's Day, huh? Like, I don't know. I don't think men need a day. Look at you. You are always, it's funny because as soon as I go live, that's when you decide that you want attention and you want to sit on my lap. You're so funny. You know, as soon as I start talking to all these folks, that's when you're like, hey, so maybe you think you should be on camera. So today you're on camera. How about that? So anyway, good morning, Pat Tenney. I hope you're doing well, my friend. How hot is it out there in Arizona? It's been really warm on the East Coast this year. I don't know if that's doing anything out that way, if it's affected your weather. But we got Rob Wilson here this morning. Good morning, sir. Bill Stevens, great to see you as well. All right, let's go ahead and let's get started. We are at the 3-minute mark. We got 25 people that show them on. So let's go ahead and jump in. I'm going to bring up my screen and we will dig in here. So take a look. The technicals this morning, mortgage-backed securities currently down 6 basis points on the day. However, if you look at where pricing came out on Friday, we're down about 18 basis points. So that's going to make pricing a little bit worse today, and I'll talk about that in a minute. Taking a look here at that 10-year Treasury yield, 4.56 is where that's at this morning. Let's go ahead and do a quick recap of what happened on Friday. Everything in front of this dotted line. Everything to the left of that here is Friday. Friday pricing came out around 10 a.m. We know that Fridays are generally a real quiet day on Wall Street in the summer. Everyone tends to go off and take a long weekend. That was the case here as well. Bonds did drift a little bit lower. You're not seeing any real flight to safety because of all the stuff going on in Iran or in the Middle East. Things were just really quiet overall on Friday, but not enough for any reprices worse. Nothing that we had to worry about, but we will see that show up a little bit on today's rate sheet. Today's rate sheets are going to be a little bit worse. If we take a look, I'm going to show you here. On Friday, we had some of the best pricing of the week, 6.63 according to Mortgage News Daily. If we take a look here at our week, we started the week with a much higher rate. If you remember, 6.75, and we improved about 1/8 of a point in rate. So much better pricing. And we were helped a lot by the inflation data that came out. I think it was a bit of an overreaction. I've said that last week and I kind of stand by it, but it did help rate sheets to improve for the week. So we will take that win. And but as far as where we're at this morning and what you're seeing here, if I move this over a little bit. Basically, when you look at mortgage-backed securities and we look here at the Japanese candlestick chart, you'll see that on Thursday we were at 99.88, Thursday, July 16th. This morning we were at 99.81, a little bit worse. And that means that rates and pricing, you're generally going to be, here was that Thursday, and you're generally going to be a little bit worse than where we were at on Friday. Call it 6.68 is what you're likely to see this morning. So we will see a little bit worse. Reprice risk on the day is low. There is nothing on the economic calendar today. It's going to be a very, very quiet week. We're very likely to see rates continue to chase oil prices and everything that's going on over in Iran. So as far as where that goes, again, economic data, there's nothing today, not much at all for the week. It's going to be a very quiet week. I'll throw the lock advice down on the bottom. The lock advice at a glance, I would still be locking anything. When we take a look, by the way, before I come to this article, when we take a look at rate sheets, you can see at our best levels, we get down to around 6.60. We've done that a couple of times as we, went over that July 4th holiday. But since then, our best has been around 6.63. We've seen that a couple of times, including on Friday. And our worst has been 6.75. 6.75, if you remember, was the worst that we have seen in the entire year coming since January. And again, this is Mortgage News Daily as a reference point. There's no such thing as a rate, but if you were to use a rate, this would be it. So 6.75, it was back in May. That was our worst pricing and rates. We've seen 6.75 again in July. Since then, just a little bit better. Not much, but a little bit better. And I would lock that up. It's really not likely we're going to see rates continue to improve too much from here. So keep that in mind. Let's take a look at the headlines and see what we got going on. There's quite a bit to cover. So first things first, when it comes to Iran, Iran is going to, everything happening over in Iran and the Middle East overall is going to continue to push up the price of oil. And oil prices are, again, what are driving up, one of the things driving up inflation, driving up bond prices, making rates worse. So Yemen's Houthis say they will impose naval blockade against Saudi Arabia. These are kinds of things that are not good for rates and pricing. This was an interesting article in Reuters about why oil prices haven't gone crazy. Now, gone crazy is a bit of a subjective term, but they were talking about initial projections that oil prices during this whole Iran situation could have hit $150 or $200 a barrel. And if you remember, they capped out around 120. Spent most of the time around 110. So this article talked about why the fact that China was taking less oil, that they had reduced their imports and demand, reducing pressure on global oil markets. That was a big part of it. They also talked about how the U.S. boosted output and the use of the Strategic Petroleum Reserve, and then the reopening of the Strait of Hormuz in June, which eased some immediate supply fears and put some oil out there, but that's been closed again. So just some interesting things to be aware of here. Another interesting article, prices again jumping across $4 a gallon. So I was really surprised to see what I feel is an overreaction to that inflation data last week that came in for June, because we are going back to a scenario where things are getting more expensive and inflation's moving up. So we know the July inflation data is not going to be good when you're looking at gas prices going up, because everything else goes up too. So we'll see where all that goes. A couple of other relevant headlines: stocks climb. Again, what's going on in stocks does influence what we've got going on in bonds. But the big thing is on oil, and there were a couple of interesting ones here. So oil prices erase the gains after Iran says U.S. talks could be pursued based on national interests. So Brent crude oil prices did hit $90 a barrel, still well below the 110 mark, but did hit $90 a barrel, but fell back and currently right around that 88.47 mark. What are they at the moment here, according to, let's see, we'll come back to this, oil prices. Let's see where we're at with oil. So as far as oil goes, Brent crude 87.80 at the moment is what it's showing. 87.77 even, according to trading at CNBC and what they're showing for numbers there. But we definitely want to be keeping an eye on oil prices. They're still below $90 a barrel. If they push up over $100 a barrel, definitely going to push rates a little bit higher. How much higher? Just maybe an eighth of a point. So we want to keep an eye on that. Oil price is going to be the big movement. 5 things that you need to know according to CNBC this morning. That we are on the 9th straight night of attacks in Iran. There have been U.S. force deaths, which is always unfortunate. So hopefully that stays at a minimum is all I can really say on that. I didn't realize it was as high as it was. According to this, it says the U.S. death toll from the Iran war, and they call it a war, rose to 17 over the weekend. Now, a few interesting things here. We continue military action. I don't know, because the ceasefire went into play. Did that like reset the whole time frame that Trump could continue to attack without getting congressional approval or congressional help, calling it a war? It's curious to see where all that is. I don't know much about that. It's not my area of expertise, but I'm kind of hanging back and watching that. Again, Brent crude did break $90 a barrel, but fell back below. This was an interesting take about how where the U.S. voters believe the U.S. government should be, and if we should be, having stakes in private companies. This is borders more on political commentary than rate commentary. I did find it interesting, though, that the White House has negotiated 30 ownership agreements worth almost $27 billion. It really does raise some questions about the government and what the government would look like, continuing to own into that. But more relevant stuff, I'm going to jump ahead to Warsh GPT. This I found interesting. Investment firms have been racing to adapt. Fed Reserve Chairman Kevin Warsh reshapes the central bank's communication strategy. Remember, Kevin Warsh has said he does not want to influence the market like Powell and the previous regime did. So he wants to keep things a lot quieter there. And investment firm FM Investments recently released Warsh GPT, an AI-powered tool that scans nearly 1,800 documents to give users a sense of how the central bank's leader is thinking about the economy and monetary policy. And it has its own UBS has its own interactive dashboard that tracks the Fed's policy tone. The bank last month told clients that Warsh's policy relevant comments were overwhelmingly hawkish. I don't have either one of those things, and I knew that. I don't know why this is such a big deal and why you need that. But here's the key, is the fact Warsh was expected to come in swinging hard as a dove and bringing rates down, cutting rates. That was what his perceived role was. He was supposed to be a puppet of Trump, and he was supposed to go in and be looking to cut the Fed funds rate. Instead, we've seen everything going on with Iran. We've seen inflation continue to push out of control, and Warsh saying that the Fed needs to rein that in, and he's been much, much more hawkish than anybody anticipated. And that's why markets currently pricing in a Fed rate hike by the end of the year, but not at the end of this month. So without as much forward guidance from the Fed, traders are anticipating the market to make bigger swings following policy decisions or Fed leader commentary. This is relevant into what we're going to be heading into next week and the idea of locking loans that are closing in the next couple of weeks. We got the Fed meeting next week. There's really nothing going on with data this week. We've got the Fed meeting going on next week. Because of that, and the idea that markets could be even more volatile than we're used to, expectations are that we could see rates creep a little bit higher next week with that Fed meeting. If markets anticipate that this is a hawkish statement and Warsh does not give them much to go by. So it's very curious to see. He doesn't want to provide forward guidance. So what will markets do with that next week? So as we get there, it just factors into why you might want to be locking rates right now for a lot of loans, because the idea is we've got nothing going on this week. We've got the Fed meeting next week. And then the first week of August, we'll get labor market data. And that's, kind of the runway that we have to see where rates go from here. And it's very likely we could see rates push higher. So Condi Rice said from day one that Warsh would be his own person. Yeah. And so far he has, Ron, which is refreshing to see. And it is great to see. So anyway, that is what we got going on. That's kind of today's headlines. One more headline, though, that I did think you might find interesting. Housing costs is the top political issue for young voters, according to a CNBC survey. The cost of housing looms large for young American voters heading into the 2026 midterm elections. Respondents between 18 and 34 years said it was their top issue, as did men between 18 and 49. Both Democrats and Republicans have tried to claim the issue after a bipartisan housing bill became law earlier this month, which I think the bill sucks. I really don't see much value to that bill. I thought it was garbage. I noticed that Trump didn't veto it, but he didn't sign it. So therefore, it was able to sneak in and become law. Once it was presented to him, he has 10 days to act on it. And if he doesn't act on it, it became law. So the cost of housing, top political issue, ranked higher than the cost of food or protecting democracy among U.S. voters between 18 and 34 years old. It was my contention that some other people, Democrats had a huge miss in 2024 by not talking more about healthcare. I don't know. I'm not going to get too far in all this, blah, blah, blah. But, this is what they say. They say the big thing is the cost of housing, and I could see it. So this is an interesting article. It's free. You can go read it and see what they said about it. Again, 99% of statistics are made up anyway. So I think polls are probably similar. Ron says, crazy media says Warsh would be a puppet, but we can't believe the media ever. The media said SCOTUS appointee would be puppets, and they have gone for and against POTUS. Yeah, I agree. I agree with that as well. But, what do you want to do? So that is what it is. So anyway, that's it, my friends. It's going to be a quiet week for economic data. It doesn't mean it'll be a quiet week for rate sheets. Today should be calm and quiet. We're going to continue to keep an eye on it. Bonds down a little bit again. We're down about 20 basis points overall from when Friday's pricing came out. So you'll see slightly worse rate sheets, but still a good time to lock in. There's just too many things that could go wrong. We're on our 9th straight night of, military attacks in Iran. You've got, I'm surprised oil has not shot back up yet to $110 a barrel. You can see where traders' heads are at and what's going on there. So once that continues to rise up, rates will rise up with it. Not anything we want to get excited about. It's just not the best environment to see lower rates, but people still want to get out and buy houses. Ron, I covered that housing report. It was just a report for politicians to say they did something. Yeah, if one doesn't study it, they think Congress did something. Yeah, exactly. So are you talking about that law that went through? It's garbage. It's garbage. That's why it was so unilaterally approved, because there was nothing in there that hurt anybody and nobody cared. So they could all claim victory. It was pretty garbagey. So, all right, my friends. Well, y'all have a fantastic Monday. Remember to learn more about how we can help you to get more loans from Google social media. Check out originatorssuccess.com. I am going to be holding a webinar later this week. It's more for non-members. It is a webinar to show you what we do and sell you the product. Not going to lie. And then Grab and Go Social. So we'll be running some stuff on that too. Check out grabandgosocial.com. $7 to give it a try for a month and help you by posting. We've got content for you every single day that you can grab and go. Posting regularly on social media is definitely the first step to getting business from social media. We've got coaching, weekly coaching. We've got content. We've got customizable content. There's a lot there for you for less than $100 a month. Go check out grabandgosocial.com. All right, my friends. Thanks again for joining me. I will see you tomorrow. Make it a fantastic Monday, everybody. Take care and bye-bye.